Hey everyone, it's Daniel here from InfoRest. Hope you're all doing well. Let's talk about Bank of Canada. So Bank of Canada came out, left rates unchanged at 4.5%. This was the first time after 12 months of raising rates aggressively that the Bank of Canada decided to keep rates unchanged. Now they have told us previously that they're planning to pause. Now, with this pause and this meeting that came out, markets were expecting that, especially after Powell testifying and saying, hey, we may do faster rates because January, if you look at January's inflation data and growth data, and Bank of Canada even mentioned this as well, if you look at the US's growth and inflation data, it came in hotter than expected. Same thing. European markets, European economy came in hotter than expected. Now, with that in mind, and with Bank of Canada mentioning that, Bank of Canada still decided to not raise rates, keep it unchanged, not do anything. They said that they're going to reassess the situation. They're going to assess the data, the incoming data, and they noticed and said that the growth is a little bit weak, but certain areas, like for example, the labor market is very strong. And that's keeping upward pressures on wages, keeping inflation higher. But again, we're going to be data dependent on what to do next. Now, Bank of Canada did leave the door open, saying that although certain places like the US and Europe has seen higher inflation, if we start to see reasons to start raising rates, we will do so. Now, the Bank of Canada wasn't that hawkish in this meeting, but which caused basically the loonie, the Canadian dollar, to sell off aggressively against the US dollar, which has been rallying because of this more rate hike probabilities, this more terminal rate hikes that are going higher and higher. Now, can the Bank of Canada follow the US in the next couple of months? Definitely, there's still a possibility. This is not the end for Bank of Canada. They can definitely come back and say, hey, just like the Fed, right? Let's not forget, the Fed in December of last year came out and said, hey, we're going to start slowing the pace of rate hikes, doing 25 basis point rate hikes. We're not going to do our usual 50 basis points and not be aggressive. But then data came in stronger, and the Fed just yesterday came out and said, hey, we're going to go, we may do faster rate hikes, which means 50 basis points, especially if the data continues to be this hot. Now, there's a 50-50 chance that 50 basis point rate hike could come this month. So what about the Bank of Canada? Why are they not following the same way, same methodologies that the Fed is following? Well, there's many reasons that one could argue about this, but definitely this pause is something that the Bank of Canada is utilizing to figure out whether the data that they're going to see, like Europe and the US has been seeing, whether this data continues to be hot, then sure, they will come back and raise the rates. Or the second reason why they could keep rates where it is unchanged is, one, yes, real estate is a big component, big sector to the Canadian economy. It's very important, very vital. At the same time, whatever happens in the US, if they continue to hike rates aggressively and it causes something to break or a black swan event happens, those spillover effects will affect Canada, which means the Fed, if they hike rates more and break something, is eventually doing everybody globally a favor, even Canada a favor, which is breaking something. And you need that break, you need that hard landing in order to bring inflation down to the central bank's target, right? The US target is the 2%. For Canada, it's below 3%. So if something does break, then sure, you'll get that drop in inflation. So it could be that, Bank of Canada is just teetering here, waiting to see what's the Fed doing, what's the ECB doing, what's our data doing, left the door open, did sound dovish, not as hawkish, which caused the loonie to sell off, but that could change very quickly, especially with data. So, we're not off the hook yet when it comes to the Canadian rate hike cycle. It can still continue, and we have yet to see weak data in the Canadian markets as well, which might happen, maybe, possibly, in summer. We may see that. But if it doesn't, it continues to be aggressive, then sure, you could probably get the rate hikes moving up higher. Now let's go back to the point where I was talking about real estate being a big component of the Canadian markets, right? The Canadian growth, the Canadian economy, very important. Same thing, immigration. They're bringing a lot of immigrants in as well. Now, real estate, on the other hand, the demand side and the amount of sales in Canada has completely plunged. The demand has completely been crushed with higher rates, aggressive fast rates. We saw Bank of Canada really get aggressive, where they went 25, 50, 75, and even doing 100 basis point rate hikes at one point. And that basically caused mortgage rates to move up. Now, the pain has yet to be seen, and there are slowly articles coming out showing cracks. And what are those articles? And I talked about a couple of times on this channel, like, for example, the commercial real estate market. A lot of people defaulting, Blackstone defaulting on a fund, unable to finance or refinance. They need to sell the properties. No one's buying. They can't handle the cost, right? So that's one component. The second component is the residential side. Now, the residential side is very interesting. There's lots of back and forth debate whether the residential side in Canada is going to be really, really affected. Now, the prices have just started to come down in the residential side in the real estate market. Now, how much further it will go, we will see. But you are seeing and you're hearing from articles out there. Like, for example, there was one article out there that was talking about a family who is trying to refinance their house, but cannot because they bought their house at a high value back in the peak of the markets, the real estate market back in 2021, November, December 2021, or January of 2022, the peak of the markets. You had people buy properties during that time. So imagine you buy a home at 1.5 million at the peak. You're chasing like everyone else. Chasing properties, buying this, buying that condo, buying those pre-construction houses or condos. To then find out that the value that you locked in at 1.5 is now worth 1 million. And now for people who are either they need to close their house, their pre-construction house, or people who need to refinance, they're unable to because their loan to value will be above 100%. And no bank really does that. They usually go for the 80%. You can go for private lenders, 90%, higher rate, but then if you don't have the income, then it's very hard to get approved. So again, it's another risk. Loan to value is a risk. The higher interest payments is a risk. So they're unable to finance, which would lead to either lawsuits between the other party and the person who's trying to purchase the property, or what I've heard is that some builders who are offering a extension of line of credit or some sort of credit, some sort of loan, because the banks or whatnot or the private lenders are not giving them loans, saying, hey, okay, since your house is 1.5, let's just take that as an example. You've done an appraisal. The appraisal says it's now 1 million. The bank's only going to give you 80% of that million. And now you have to cough up not only 500, but 700K of that money. Will help you, give you some money. Just put some down payment down. We'll give you the rest, maybe another 500K, and you pay 10% on that. So you're leveraging even higher with high rates, higher inflation, higher prices and whatnot. That's one way to look at it for maybe some people. And the others, it may be that, hey, you got to cough up the down payment. Otherwise, there's all these legal fees, or you lose your money completely, or there's battles or whatnot. And this is just the beginning, right? These examples that I'm telling you, these are the cracks that are starting to show with the high rates, the excessive buying of home properties, even though some people didn't really mean on purposefully through greed, try to buy a house to make more profits. They maybe simply wanted to buy it because they needed it, right? Which is pretty sad. Some of them are now seeing that they may have to sell their property or get out of that deal, or may have to take in a loss, which could be a very hefty loss of maybe 200, 300, 400K. Or maybe even default on that, right? So it's very, very dangerous, very, very sad as well. And definitely the people out there that were going out and buying condos and houses, and the greed was at all-time highs, they're also feeling the pain from the housing value basically coming down, the new appraisal, higher rates, and unable to refinance, and unable to also sell, or find it very difficult to sell in this current environment. So those could be the reasons why you're getting Bank of Canada pausing and waiting. One, because yes, there is stress among consumers. Don't forget the tax rates also in Canada, depending where you're living in, is pretty high, especially in those big cities like Toronto and Vancouver. Plus, you've got higher interest rates, higher prices, food prices, shelter, rent, etc. It is definitely pinching the consumer, and you're hearing signs in these articles. These are just the beginning. This is just the crack, and it'll be very interesting to see what the markets look like in summer or close to the end of the year, which is not only scary but also sad. So let me know what you guys think. Leave a comment below, subscribe, hit the like button as well, and the bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.